Listen, right now we're in some real unprecedented times in the stock market. We've got some insane fluctuations that are happening. We've got people panic selling, the market crashing, the market just bouncing back the very next day, and just insane returns that have been going on. Now, a lot of people have been panic selling and just freaking out over everything that's been going on. Now, I want to talk about what's actually happening and why the market's so crazy right now. And then a lot of people who are watching these videos are newer investors and they haven't really invested through a time like this. But I just want to talk about what I'm doing in my portfolio to really set myself up for success given the current market environment and all the future situations that can arise here. So let's just rewind a few weeks. Now, if you haven't been following along, the US and China have been going back and forth for months now, slapping tariffs on each other. It's like two kids fighting in a sandbox over a toy. And if you're not familiar, a tariff is basically a tax on imported goods. So let's say a US company imports steel from China. If there's a 100% tariff on that steel, well, it now costs twice as much. And that extra cost almost always gets passed on to the businesses and the consumers. So the US was threatening to raise tariffs on Chinese products by well over 100%. China fired back with their own set of increases, and the situation was escalating quickly, and investors were bracing for impact. So businesses were panicking, CEOs were warning about higher costs, the market halted, and honestly, it was for good reason. Trade wars rarely end well. But then, in true market fashion, everything flipped overnight. On April 9th, President Trump announced a 90-day pause on most of these tariffs, a temporary truce. And most of the aggressive tariffs, they were actually put on hold, except for the tariffs on China, which actually increased. And just like that, the stock market came back to life. Now, the market reaction was instant. The Dow Jones jumped nearly 3,000 points. The S&P 500 had one of its biggest single-day gains since the 2008 recession. Investors who were sitting on the sidelines jumped back in. Confidence started to creep back up into the market, and I woke up to a portfolio and saw that I was up over 9% in a single day, the most I've ever been up in a single day. So let me just say that's extremely rare. It's not normal investing behavior, but it's a perfect example of why I don't panic sell when the market drops, because when it does bounce back, it often does so way faster than people expect. So why did this happen? Well, let's break it down in the most simple way possible. When tariffs go up, businesses and consumers end up paying more. That slows down spending, that slows down growth, and that makes investors nervous. So when the government suddenly says, you know what, let's pump the brakes on these tariffs, it's like taking a giant weight off the market's shoulder. And remember, markets don't just react to what's happening today, they react to what they think will happen tomorrow. For a few weeks, the future looked really, really scary. More tariffs, slower growth, a potential recession, but the pause gave everybody a little bit of breathing room. It told businesses, you know what, you've got a little bit more time to plan, and it told investors this might not spiral out of control after all. And that was all the market needed to go from fear to full-blown optimism. So what was my reaction to the jump? Now, look, I'm really not the type to throw a party whenever my portfolio goes up, because if you've been investing for any length of time, you know what goes up can come right back down. But I'm not gonna lie, it does feel good to see your long-term strategy working. See, when the market was dropping over the last, number of days, even when it goes down for weeks, I don't panic sell. I'm not sitting on the sidelines either. I still buy. I still invest every single week like I always do. And when the market recovers, well, those boring, consistent little investments, they turn into gains. And that happens way faster than normal. Not because I'm a genius by any way, shape, or form. Not because I predicted anything, but literally because I just stay consistent when the market falls. And it's a very comfortable strategy for me. But this is where most people mess up. They see the market dropping and their brain screams at them to sell, to pull their money out, to wait for the right time to put their money back in. But here's the thing, the right time almost never feels like the right time. Listen, if you sold last week because of the tariffs, then you actually would have missed at one of the biggest single-day market gains in history. And that's how most people end up losing money investing. It's not because they bought bad companies. It's not because they didn't, know enough, but because they let emotions make decisions for them. And you have to remember, this is not the first time that the market's gone through something like this before, and it definitely is not going to be the last. So let me show you a few different examples. You see, in 2008, during the Great Recession, the market crashed really, really hard. But if you had invested then and simply held on, you would have made an incredible return over the next decade. In 2020, when COVID hit, the market fell by over 30% in just a few weeks. It was absolute chaos, but within months, the market had already recovered. and then it ended up hitting all-time highs. So then we can look even further back. In the 1980s, we had Black Monday. The stock market dropped 22% in a single day. But guess what? It ended up recovering every single time. And the people who build real wealth aren't the ones that jump in and out every time the market moves just a little bit. It's the people who stay invested, they consistently invest, they're patient, and they stay focused for the long game. So what do I do when the market gets crazy like this? Honestly, it's nothing fancy. Here's exactly what I do. First, I stick to my plan. I invest a set amount every single week, and no matter what happens, no matter what the headlines say, I just keep putting money in. Some weeks I'm buying high, some weeks I'm buying low, but here's the thing, I'm always buying. Second thing is I invest in a lot of times the things that I'm using. This has become a bigger deal to me lately. If I'm spending money on the company's products that I want to own part of the company. Bought an iPhone, I own Apple. Streaming Netflix, I own some Netflix. Just a simple way of putting my money where my habits are. The third thing is I automate everything. My Roth IRA, it's automated. My stock purchases, they're automated. My ETF contributions, automated. And that way I'm not relying on motivation or memory to build wealth. It happens whether I'm paying attention or not. So here's what most people get wrong though. Most people want to treat investing like it's a casino. They want to get rich quick. They want to time the market perfectly. They want to feel smart, but investing isn't about being smart. It's about being patient. And the biggest mistake that I see new investors make is this. They get scared of the market when things go down. Then they wait and wait and wait until prices recover, and then they finally buy in, but it's at much higher prices now. It's like selling your house during a storm because you're scared it might get damaged and then buying it back after the sun comes out for double the price. That's just not a winning strategy. What I recommend to new investors is if you're watching this and you're feeling nervous about, tariff news or the market going crazy, here's my advice. First, just take a step back, take a deep breath. I mean, seriously, the market going up or down doesn't mean that you did something wrong. Second, you need to get consistent. Set a small amount, weekly, monthly, and just invest it. And do this no matter what the news says. Even if it's $5 a week, it's better than nothing. Third, I want you to zoom out. Stop looking at what your portfolio did today or this week and start looking where you want to be, 10, 20, 30 years from now. Because long-term investing is not about being perfect. It's just about not quitting. So here's the thing. Trust me. I mean, tariffs today are just part of the story. We're talking about them now, but trust me, next month, it'll be something new. Maybe it's inflation. The next election cycle comes up. Maybe it's a global crisis. You never know what's around the corner. There's always going to be a reason to panic. There's always going to be a reason to wait. And there's always going to be someone telling you that this time is different. But here's the truth. It's almost never different. Markets go up, markets go down, and that's just how the game works. The key is not to predict what happens next. The key is to stay in the game long enough for the odds to work in your favor, and that's how you build true wealth. So what should you do right now? Now, if you're me, you keep doing what you've always done. You invest in these solid companies, you ignore the noise, you keep investing no matter what happens when the market goes up, down, sideways, doesn't even matter. I never even think too much about it. Moments like this, big jumps, scary, crazy headlines, sudden rebounds, they aren't signals to change your strategy. They're proof that your strategy is actually working, because if the market can drop 20% over tariffs and then rise, 10% in a day because of a pause, I mean, what does that tell you? It tells you that nobody knows what's going to happen next. But it also tells you that the people who stay invested through the fear, through the noise, through the panic are the ones who actually get rewarded. You don't have to be perfect. You don't have to know everything. You just have to start, and then you have to not quit, because the people who win in the stock market aren't the smartest. They're literally just the ones who never leave.